Not wasting much time. Right. So this is one of the trades that we're currently in. We took this trade yesterday. Yesterday around this level here, which where I marked here. We took this sell yesterday on GBP yesterday. So we've been holding and we are still in. We took it yesterday in the VIP group only. And I'm actually anticipating it to come all the way down to that zone that I marked there. Let me just do a quick analysis on that pair, why we took the sell and what I'm possibly anticipating for the entire week basically on GBPUSD. So right, so this is my overall bias on GBPUSD. My overall bias is this one. Let me go to the daily actually. Let me go to the daily actually. Right. So GBPUSD, this is my lookout actually. The reason why there is a lot of drawings like this, we actually had a success, a very, very beautiful class, a very beautiful class with the mentorship guys there on was it Sunday or Monday? Sunday, yeah, Sunday. That's why you see a lot of things that are here. So I didn't delete anything. I just continued with the setups that I had already done. So the bias was, so my analysis on this trade actually started on a weekly time frame actually. Started on a weekly time frame, but I don't want to waste much time going there. So in this case, you can see that externally on the daily, on the daily, you can actually see that we have very beautiful, a very, very clear downtrend externally. Externally, when I say externally, I'm referring to, if you notice, this is a swing lower high, that's a swing lower high there. This one's a swing lower there. That's a swing lower high there as well. So if you notice, that is the external structure. Same as this one. That's a lower low there. That being a lower low, even this one up here, it's a lower high. So you can notice that externally, our order flow is still what? Is still bearish. Meaning, if ever order flow is still bearish, we're anticipating the swing lows to be taken out, while the swing highs are being maintained, right? So that's the overall characteristics of a market that is in that state. If a market is in a state of bearish order flow, it's a market that is breaking your swing lows but maintaining the swing highs. So basically, we are coming from a swing high there, and I actually mentioned that we had a very beautiful zone there on the weekly. Let me go to the weekly just real quick so that you see. We had a very beautiful zone there on the weekly as well as the monthly, where one could have actually started selling, because remember, order flow is still bearish. It was still bearish ever since even here. This was 2018. 2018, it was still bearish. You can see that on this particular zone here, that was the supply. This supply, after it was created around 2016, the market came back to the zone around 2018. It took it two years to come back to that supply. After coming to that supply, obviously it dropped because order flow was still bearish, meaning from 2018, you could have actually anticipated sales, long-term sales, the entire year, basically. If you notice, because from that leg to take out this low, it was actually from April 2018 up until around November, December 2019. You see, it actually took almost a year and a half just to come from that leg to take out this leg. So meaning your buyers throughout the year of 2018, you realize that you would have been targeting sales up until they take out this low like this. Then the next retracement again after they broke this major structure, remember, after every major break of structure, they will always pull back now into those premium zones. Your premium supply is there. I mentioned that the reason why these supply zones, these ones below here, the reasons why they are taken out is because they are used as liquidity. The market uses these ones as liquidity, prefers to come to the extreme one there, because that extreme one, they will know that they would have collected a lot of liquidity in form of equal highs here, in form of retail levels, which are these ones, the ones in yellow there, those are retail levels. They would have collected a lot of liquidity there. So after collecting a lot of liquidity, the best zone for them to continue selling, which are the institutions, is there on that supply, that one. They came back there as well and started dropping from there. So that was also another set of entries that you could have taken. So meaning here, that was a sell all the way up until you take out the low. That one, that was a sell up until you take out the low. Same thing right now. We shifted internal order flow now, because remember, for that high to be qualified as a lower high, it has to shift internal order flow. It has to shift internal order flow. And if you notice, this was it's also a supply zone there. There's also a supply there on the weekly. This is a weekly time frame. You can see that there's a supply zone that is there, right? So there being a supply zone like that, they are having a supply zone like that. It's also a very interesting thing, because on the monthly, you also see the same similar supply zone. That entire zone, you actually see it as well on the monthly. If you go to the monthly, this is the monthly time frame. So this is the zone. This was this is the zone on the monthly. If you notice on the monthly, nothing above here. There is no clear supply above here that I can say is not that was not retested. Most of them were retested. This one was the only one that was left out. So them leaving out this one, they came back and touched it here. That's why I said that was a very sensitive zone that you could have actually started taking major sales from. Meaning, if you look now at this structure, summarizing everything, you realize that after they broke this structure, which is taking out this previous low like this, after they take out the major swing low like that, always anticipate a pullback, especially into those premium levels before continuing selling. Don't keep on selling below there after they take out that swing low like this. Take out the swing low, take out the swing low here, they took out the swing low here. After they took it out, then they pulled back. That pullback, you realize also using Fibonacci from point A, which is the top, to the bottom. It was within the 61.8 and 78.6 region there, which is a very good region also to sell. So long as about the 50% range, it's considered a very high probability zone to actually enter your sales. So that was a good region. Supply zone there, you can see the supply. You can see order flow is bearish. You can see that it's within a very sensitive Fibonacci region. Then I also mentioned the issue of a trend line, which is the last conference that maybe you could have also added to say, I can see a trend line, which is not really, personally, I don't really look at that now much. Not merely to say I can't see the trend line. I can see the trend line, yes. But I look at structure now as it is. I look at the market as raw as it is, because I've shown you so many times in which trend lines are being manipulated, so many ways in which trend lines are now being manipulated, so many ways whereby they can break the trend line and not break the structure. So if ever all you know is trend lines and you don't even understand the real structure, because trend lines, what they are trying to do, they are trying to give you they are trying to show you the direction, not give you the direction. Actually, they're trying to show you the direction. They're trying to show you the market structure. They are trying to show you the market structure, but they are not the market structure. So you need to know that difference. So that was also another confluence. So you notice that they, from when was this? This was around July this year, actually tapped into that zone July this year. So meaning from July, August, September, October, this is 4 months. 4 months, your bias is entirely bearish, because you're coming from a major supply zone and order flow is bearish. Order flow being bearish, you're anticipating them to keep on dropping all the way down, maybe to this yellow zone here. They can come to this yellow zone, maybe bounce. If they want to go up, they can actually bounce from that yellow zone. But if they are going to continue with bearish order flow, they'll come actually and take out this low, this one. So meaning our first major levels where we are anticipating some reversals is this level. Then our next target is that swing low there. So going back now to the daily, since I showed you the major zone there, why I had marked. So this is the major zone, this one on the monthly that you saw on the monthly there. That's the major zone that you saw on the monthly. Right. So on the daily now, on the daily, remember, we took out this swing low. We took out this swing low. After taking out a swing low like that, this pullback, it's something that you must always anticipate. Meaning, someone with that understanding now of knowing that after we take out a major swing low, it's like we've finished an entire institutional move. An entire institutional move is whereby the institutions they move price. Let's say they're in a bearish order flow market, like in this case, it's when the institutions move price from the swing lower high and take out the swing lower low. That's an entire full institutional move. So, meaning after you've taken advantage of this institutional move, anticipate them to now pull back before they continue with the next institutional move. So now, after they took out that swing low, obviously you would have anticipated these buys. These buys, you could have caught them in so many ways. So many ways you could have caught those buys. So many ways. There's an entry there, the breaker block. There was an entry, trend line, a trend line entry. This one, that was a simple trend line entry. And when you go to lower time frames, you realize that internal order flow actually shifted nicely, which was also another major confluence that you would have actually considered or looked at there. So those are the things that happened in order to facilitate that pullback. In order to facilitate that pullback, the market had to shift order flow, which is what it did up until they kept on going up. As they kept on going up, kept on going up, kept on going up, you realize that demand zones here, this demand zone was also another entry. Tie the demand, tie the demand, tie the demand. That was an entry. Broke structure there, came down here, respected this leg here or this previous supply there. That was also another previous supply there, broken, retested. That was an entry as well. So you notice so many entries that you could have caught. You would have caught this breaker block. You could have caught this one. This buy, you could have caught it. This one, you could have caught it. This one, you could have caught it. This one, you could have caught it. After breaking the supply, that was a breaker block. You could have caught it, caught it, caught it, caught it as well. Then here, after they broke, they actually came to test the demand again here, this inside demand, up until they reached that zone that you saw on the monthly. So all of that were opportunities, buying opportunities. That remember, these buying opportunities, they are simply retracements now of the real real move. The real move on the higher time frame it's showing you the bearish order flow. So now looking at its structure as it was going up like that, you realize that this was a high, this was a low, that was a high, that was a low, higher high, higher low, higher high there. This is a higher low. That is a higher high up there. So that being a higher high up there, remember our higher low is this one. This is our higher low because this one is our higher high because it shifted internal order flow, right? That's why it's a higher high. Same as that one is a higher high because it shifted also internal order flow here. So that shift of internal order flow, most times I even put it with a with a minor change of character. The reason why I call it a minor change of character is because it would not have shifted the entire major change of character, like in this case, this one. This is the major change of character, whereby they take out the entire what do you call this? The entire higher that's a higher low, right? So that's a major change of character now. This shifting in internal order flow is just qualifying this as a higher high. But this one now is now saying order flow is now bearish. On the daily, order flow is now bearish like that externally. So this external bearish order flow on the daily is now also complying now, is now in alignment with that monthly and that weekly bearish order flow as well. So after I saw that they did this, the same thing, after they take out a major low like this one, after they take it out like this one, after they take out the major low like that, they will pull back into a premium zone before they continue. That's an art that once you understand that, you realize that most of the times you find yourself on the right side of the market and not on the opposite side of the market. So basically, after taking out this major low, now our major bias now, currently my major bias actually, which I actually explained with the guys that I'm now anticipating a major pullback. into a premium zone before we continue. Why? This is how institutions think. After fulfilling this, is an institutional move coming from that high to take out this high, this higher low. From that high to take out this one. That's a one institutional move. This one, right? That's number one. After they're done with that one, their next thing now is to come pullback. This pullback it is there for so many reasons. Number one, they are collecting liquidity with that pullback. Number two, they are manipulating a lot of retail traders just by that pullback. Number three, because most retail traders, they'll think, for example, that's why I even put that channel. The purpose of this channel is simply one, so that I show you that most retail traders, what they will do now in this case, they'll think even after this channel is broken. Remember what I've told you about trend lines. They are not the real structure. They just try to define structure, but they're not the structure. So trend line traders can simply come and draw a channel like this. So after they draw a channel like this now, it means what they are saying now is after their channel is broken, they'll say, now we're in an uptrend. But is it really that we are now in an uptrend? That's the question that you must always ask yourself. Are we really in an uptrend, or it's simply a pullback of a certain move? That, for example, here, it will be a pullback based on understanding and based on, you know that this will be a pullback for the continuation down. Pullback of this entire bearish. So once it pulls back like that, it means this now will now be a lower high because it will be lower than that one. Sometimes they can even come all the way to that high, test it, then drop. They can actually come all the way to that high, test it, then drop. So someone without that understanding can actually think that we are now in a major uptrend. It's not even a major uptrend. It's just a pullback, in as much as it can take days or weeks for that pullback to happen, right? But entirely, the market structure overall will still be bearish. So our major opportunities on GBP USD this week, as I said, this week, today's Tuesday already. I'm still anticipating it to keep on dropping. Remember, we're in sales. We are currently in sales and they are flowing nicely. I'm still anticipating them to keep on dropping. Then after they come to a certain zone that I'm going to show you, they were anticipating swing buys. Those swing buys I'm anticipating them to come all the way to that level there. These major levels that you see here, these are major targets that you can actually utilize for those swing buys that we are going to take on GBP USD. So once you take those swing buys, it means also, so I said this will be around 15 December, around somewhere there. This will be around December by the time it comes there. So meaning January, entering January already, you have a bias. You have a bias already. I'm giving you a bias that you can even enter January 2024 with, whereby you actually, by the time it gets there, it will be also around December, late December, early January, around also here, which is where you are anticipating a drop already. So already you are having a setup that can hold you, that can actually assist you to make money, not only today, not only tomorrow, not only this week, but next week, as well as the next coming weeks, as well as the next coming weeks, up until we finish the year and also up until we start the new year. So this trade now. So now looking at 4 hours, if you notice 4 hour structure. So 4 hour structure, they came and tapped into this zone after taking out the major low like that, which is with this major change of character like that. I said I anticipated what? A pullback. But to facilitate that pullback now, they now need to shift this order flow to bullish, like which is what they did here. That was a previous lower high internally, lower low. They broke the lower high like that. So now, once they've done that successfully like this, I'm now anticipating that pullback that we want to the upside to happen. But before it happens, remember, after they changed character there, they will always pull back into a major zone before a continuation. And if you notice now on the 1 hour, that's where our major zone is much more clearer there on 1 hour. On 1 hour, if you notice, the structure is better, much more clearer there. So this is the structure now on 1 hour. Change character, they change character there. This change of character is there to facilitate that bullish pullback that we want to the upside, right? But after they change character, the same thing that I'm explaining, that after they take out a major level like this one, That's an institutional move. After they do that, they'll always pull back. The purpose of pulling back, they're pulling back not only to manipulate retail traders, but also to collect a lot of liquidity that would be below in terms of trendline liquidity as well as equal lows liquidity, like this one. Right? So these equal lows, these ones, equal lows. That's a retail level. That's a retail support. So that retail support is going to be taken out. They will tap into this supply zone as well as the fair value gap that is there. Then from there, that's where we're anticipating our swing buys. Here. That's where we're going to take our swing buys. Currently, we're in sales. And I'll tell you now why I took those sales. So this is the swing buys. First major target is that one. But the next major targets are the ones that I showed you there on those ones. Up there. Those are the major targets that I'm overall anticipating now, because that's a swing trade which I'm anticipating everyone to hold actually. So the purpose now of taking this sell now was taken based on understanding, whereby you understand that the market hasn't fully, the institutions, they haven't reached their major buying zone. That's point number one. Point number two is, if ever they shift now this internal structure, which is coming down, if they shift this internal structure coming down, it means that they are already saying this is now our higher low. Once they've said this their higher low, they've left a lot of liquidity, which is this one. They've left a lot of liquidity on the table, which is not a wise decision. So institutions, they are thinking the same way I'm speaking like this. This is the same way they are also thinking, whereby as this pullback is happening, remember their target zone of this pullback, their major zone of higher probability is this one. Why that one? Above it, you see there's a lot of liquidity. So they can't, there's no way they can choose a zone that is above a zone of liquidity. There's no way they can choose a zone that is above a zone of liquidity. So meaning any zone above this liquidity zone, they are going to take it out. All the demands that you find there. That's why you see I was laughing when I saw people who were buying GBP USD here. Who were buying it here. Who were buying it here. All these mini demands that you see here up there. People were buying here. Wha, they're taking out, buying here. Wha, buying here, taken out. So they are buying out of a lack of understanding. It's a lack of understanding. You don't understand. You don't really understand. You don't really understand what you're doing. It's a lack of understanding. So now, all these zones that are above the zone of liquidity, they will be taken out. They're also being used as liquidity. Taken out, up until they take out this major zone of liquidity. That's when this demand now is going to hold. This is the one that is going to hold because of all the reasons that I mentioned. Order flow is now bullish. Order flow being bullish, there's a lot of liquidity that they would have collected, meaning they no longer have any reason to take out this demand. They can't take this out. There's no reason for them to take this out. So there we're anticipating swing beautiful buys. So now the purpose of this sell, as I said, is they'll be pulling back into their major zone, which is this one. They mustn't shift this internal structure, because the minute they shift this internal structure, already they are saying this leg is now their higher low. So they still want to keep on coming down. That was the first point. Then the next point now was looking at this internal structure. When you look at it internally like this, what they simply did was they simply broke structure, because you're now looking at this internal structure now. They simply broke structure here to the left. The same thing that I'm showing you on a higher perspective is the same thing that is also happening on a minor internal perspective. They broke structure. After they broke structure, which is an institutional move, after this institutional move, taking out this low like this, they will not continue selling down here. They will pull back. Majorly, I was anticipating this order block, right? That's why we actually started to enter our sales right on the supply zone there. That's why we started to sell, right? So after they break this structure, there is the supply zone there that is untapped, and below it, which is this one, there is inducement liquidity. which is so meaning once they see all of that, all of those factors, hear me, if ever there was no adjustment here, or if ever that supply was tapped already, what they could have done, the best move they could have done here was simply to pull back into a breaker block and continue coming to this zone. Breaker block, they could have used this previous demand here. They would have simply pulled back into the demand and continued dropping into our zone. But because above there is liquidity, inducement liquidity, as well as an untapped supply, that is why they came all the way up there, which is where you were supposed to enter yourselves. I was laughing when I saw people selling down here, down here, down here yesterday. Most retail traders yesterday, they were busy selling down here. Broken, support has been broken, support has been broken. Let's sell what? They sold here. They sold here. Taken out. Broke again. They sold. Taken out. So imagine how many times people were taken out yesterday. Support. Support has been broken. Okay, here, the first time here, right? It was broken below. Came back. They sold. Taken out. After it went up, they bought. Taken out. After it came down, they sold. They are taken out. After it went up, they are buy. They are taken out. After it goes below, they sell. They are taken out again. Imagine more than 5 times simply being taken out because of a lack of understanding, because you don't really know, you don't really understand what is really going on the market. You don't really understand what is going on. Your understanding of the market is shallow. So imagine more than 5 times people were taken out there, and most of your so-called social governmentals, by this time they would have said, manipulation. Hey, today the market is not on our side, guys. Hey. Yet themselves, they also lack understanding of what is going on. They say sell here. Guys, let's sell. It's a sell. They sell here. They're taken out. It's a buy now. Let's buy. They're taken out. It's a sell. They're taken out. It's a buy. They're taken out. It's a sell. So you notice more than 5 already. By that time, you are mentally, you're no longer mentally okay. Mentally, you're no longer well. Mentally, you are already mentally disturbed. By that time already, you are not only are you mentally disturbed, your account is already also disturbed. Your trading account already also is disturbed. So us now, the professionals, we were simply waiting, folding our hands during this entire time, targeting that zone. Then once it reached our zone, that's when we started to sell. And if you notice, in as much as I think we waited just some few hours, we waited as it was just playing around in one zone. But when it's now going, it's now going. When it's time to go, when it's now going, it's now going. We can wait for those few hours maybe of consolidation in that zone. But when it's now going, like as you see now, the way it's dropping, it's now going. When you see it going, when it's now going, it's now going. So that is the whole perspective of us taking that sell. We looked at internal structure, and that internal structure, for us to keep on coming, remember they're targeting this zone. For them to fully come to that zone, they mustn't shift this internal bearish structure. It must still be maintained. So they must maintain that. So that was the whole entire bias or the entire perspective. So this is where also people are trapped. Like this, you see this level here. This level here, people of lesser understanding, they will come and think that is a change of character. This is not a change of character. The minute you say this is a change of character, you are anticipating to buy hard around maybe here or any other zone, or this demand here. Once it comes to that demand, you'll find someone buying hard there because they've said this is a change of character. And what it would do, it would give you a form of maybe reaction, then wipe you out nicely because you lack understanding. So long you lack understanding here, the market will deal with you thoroughly. Proper understanding. So long you lack proper understanding, trust me, the market will deal with you thoroughly. So this is a sell that we took yesterday. Beautiful, flowing nicely. Beautiful trade, which is running nicely there. Once it comes into this region, we're anticipating seeing buys. So that's one of the major trades basically that I can say we took this week. This is one of the major high probability trades, actually. Major high probability trades that we took this week on GBP USD